Welcome to the Ecom Breakthrough Podcast. Are you ready to unlock the full potential and growth in your business? You've already crossed 7 figures in sales, but the challenge is knowing how to take your business to the next level. Join Josh Hadley, an 8-figure Ecomm business owner and investor, as he interviews highly successful business owners. Get ready, because you're going to learn specific actions you can take today to help your business reach its full potential and leave a lasting impact on the world.
Welcome to the Ecom Breakthrough Podcast. I'm your host, Josh Hadley, where I interview the top business leaders in e-commerce. Past guests include Kevin King, Howard Tai, and Roland Frazier. Today, I'm speaking with Jason Snider, the co-founder of Summit eCommerce Advisors, and we will be talking a lot about transforming your e-commerce bookkeeping with an innovative approach. This episode is brought to you by Ecom Breakthrough Consulting, where I help 7-figure companies grow to 8 figures and beyond. Listen, Jason, I started my business back in 2015, and I grew it to an 8-figure brand in 7 years. But I made a lot of mistakes along the way that made the path of getting to 8 figures take even longer. At times, I doubted whether our business could even survive and become a real brand. I wish I would have had a guide to help me grow faster and avoid a lot of those stumbling blocks. So to our listeners, if you've hit a plateau and you want to know the next steps to take your business to the next level, then go to ecombreakthrough.com. That's Ecomm with 2 M's to learn more. And as a special bonus to my podcast listeners, this month I'm giving away one $10,000 comprehensive business strategy audit session at no cost. All you need to do is email me at josh@ecombreakthrough.com with the subject line strategy audit, and then tell me why your business should win the free audit. And don't worry if you don't win this month, because you'll be entered to win for future months to come. But today I'm super excited to introduce you all to Jason Snider. Jason has been known as a digital marketing entrepreneur. However, most people don't know that Jason has more than 20 years of experience in accounting. Having this background, he saw the problems e-commerce business owners experience with the traditional accounting industry that led to this vision of helping e-commerce business owners understand the different selling platforms, how the fees integrate with payment providers, implementing a profit-first strategy, and gain clarity on their e-commerce business financials. So with that introduction, welcome to the show, Jason.
Great. Thanks, Josh. Thanks for having me today.
Jason, I'm super excited to dive into the details of this innovative approach to accounting and what you've created here. So I'm curious to hear how your business got started, right? And what led you to creating Summit eCommerce Advisors to begin with?
Yeah, so Isaac, my co-founder, and myself had known each other for a few years through a networking group. And he'd sold his business in 2019 and was starting to figure out, hey, what's the next step for me? And decided he was going to try to help business owners with their bookkeeping, given he had I'll say a negative experience, or not, it wasn't what he was looking for as a business owner in e-commerce. Just felt that nobody was paying attention to him. It wasn't speaking to his needs as an e-commerce store owner. And he was sharing some of his challenges and problems of getting that business started. He had like 9 or 10 clients, I believe, at the time, and was telling me, and I just started answering a bunch of his questions. And the next day he's like, hey, I think we should partner together. You seem to know what you're talking about and things. And so that was the genesis of us starting to work together. January 2020, we all know it happened later in the year in 2020, but we launched the business in January 2020 as a way to engage with e-commerce store owners to get better clarity in their business finances.
I love that. Tell me some of those problems and challenges Isaac was initially facing with the e-commerce, bookkeepers that he was working with.
Sure. So he was working with a CPA firm, as I remember, and there was 2 problems that he was consistently identifying. One was just a lack of service level in general, of not answering questions about the biggest question he had was, well, the P&L says I made this much money, but that's not what's in my bank account right now. Tell me why there's a difference. And the account would just say, well, that's what it is. And just kind of left him on his own to try to figure it out. So service level was the first one. And the second one was most accountants don't understand the rapidly evolving technology background or platforms, systems that we have to deploy to really capture and get clarity in our business finances as e-commerce operators.
Fascinating. I think that, your first point or pain point there, right, with the service level is, hey, my P&L looks great, but where did all of this cash go? And I think you've implemented, that profit first system, which I'm excited to dive into. But then secondly, kind of that tech stack in order to, accurately create those financial statements, I think is super important. Let's kind of start there, Jason, with the tech stack. What are some of the, with ChatGPT and AI, there's been a lot of new software that has come out, and it's an ever evolving world for sure. But what are some of the best tech stacks that people should be using when it comes to, reporting and creating their finances and bookkeeping?
Sure. Yeah. Internally, we use a thing of keeping it simple. There's a lot of technology out there. I think there's actually an overuse by many e-commerce business owners of technology, and that creates other complexities down the road. And an example would be, let's say, a Shopify direct connection to your QuickBooks or your Xero. In most cases, you're basically recreating your sales ledger inside of QuickBooks or Xero, which is, in our view, kind of pointless. Those platforms are designed to manage that information. QuickBooks isn't designed to manage, or doesn't need to be a duplicate of what you've already got. For us as accountants and me as a business owner, I want the clarity on my finances, and that's what QuickBooks, which is a general ledger software, and Xero are there for. I don't need to recreate these other things that are already platforms that are already existent to support those needs. So one, there's a little overuse of it. And two, we want to simplify and just get the things that we actually need. And so example for us on the bookkeeping side is I don't need all 40 sales that happen during the day. I need a daily sales ledger, the totals, how it affected each of the accounts, and then get that recorded so that we can get clarity. So the reporting and data extraction we do later on for more forecasting and things, I don't have to sift through tons of data. I've got less data, but it's more.
Yeah, that makes a lot of sense. Do you have a preference, whether it be using QuickBooks or Xero? Is there a better one over the other?
For us as accountants, if we walk into it, we're going to ask some questions about operationally. That's the first questions we're going to ask before we advise around that. As far as an accounting software, we prefer Xero if it meets the business owner's needs. And there's a few functions that need to be taken care of. So it's more important for the business and the business owner to have comfort and confidence in the systems that they're deploying. So we're not going to say, hey, we prefer Xero, so you should use Xero. It's going to be operationally first satisfy that need, and then we'll give feedback from our point of view. And so if we have a preference, all things being equal, we will have deploy Xero in most cases, yes.
Makes sense. I think what I love as I hear that is that obviously you guys are very client-centric in doing what's in the best interest for the client. What are those use cases where QuickBooks might be better than?
QuickBooks, where they'll have more API build-outs for your other platforms and things when those things are necessary, especially if it comes to like a large payroll or an inventory platform that you need those connections there. Many times you don't need those, but in some cases it's needed because the amount of data that's consolidated and imported, and also the accuracy of it. If you have manual processes, that can introduce some issues if it's not done correctly. So usually it's around APIs and being able to interact with other platforms is usually where QuickBooks has more of a superior deliverable to the clients.
Yeah, makes a lot of sense. Good. So now we kind of have a lay of the land in terms of, what technology we should be using or the lack thereof, right? Keeping it simple and not getting complex. Jason, I want you to dive into, you have this holistic kind of more innovative approach that established bookkeepers necessarily don't have. Do you mind providing an overview of what is this new innovative approach that you have to better serve e-commerce clients?
Right. So we take it from the business owner's perspective. Accounting there is to serve the business and the business owners to make decisions, provide clarity, know what's going on to a large degree. It's never 100% down to the penny accurate, but most of us don't need that level of detail to manage and operate our businesses. So we take like you mentioned before, a holistic, client-focused process and build our systems around that. And a couple of ways we do that is we reimagine, if you will, the P&L statement Most of us are familiar with your revenue, your cost of goods, and then your operating expenses. So we've taken the approach of what we call bucketizing expenses and putting groups of expenses together into a group. You have a subtotal, so you can see where your spend is in these major parts of your business. And so we have a template of sales and promotion, or advertising and promotion, operating expense or overhead, website and technology. If you have a larger team, then we'll have like employees or human resources. And we put it into those buckets because it doesn't help a business owner to have to search around and find, okay, I spent so much on this agency. I have these two platforms where I got ad spend. And when they're separated out and you don't see, what we want to give is a single glance to the business owner so they can roughly see, hey, I've spent $10,000 on attracting new clients or new customers to our store and things. So that's one way. And the second way is with service. Our team is responsive. We try to answer questions within 24 hours in most cases. We don't guarantee that. Some of our clients choose to engage with us at a higher service level to get those response times. But we're always striving for within 24 hours and things. So we're trying to reimagine from the business owner's perspective of the experience working with a bookkeeper.
Awesome. Yeah, I think that's super important, and I like that approach. I'm curious, Jason, from your perspective, and you've got lots of experience, what do you feel like are some of the most common mistakes that you see when clients come to you, whether they've been trying to do their bookkeeping by themselves or they've had another service that's been providing their bookkeeping? Where are you seeing most e-commerce sellers, specifically Amazon sellers, making mistakes with their books?
In that area, it's the connection with Amazon and whatever their QuickBooks or Xero, of getting those synced up with their accounts if they have those direct connections. So the two most common mistakes we see is those connections not being set up correctly, or, as I mentioned earlier, a tidal wave of information. Not so much Amazon specific, but the understanding what the fees are, where they're going on your general ledger or on your chart of accounts, what part of the report are they on, and understanding those things. And especially if they've got a third party like a secondary payment processor or something, where's that showing up on the balance sheet, and how is anybody reconciling it? So that's the first one. And then the second one is the inventory bugaboo. The big question is, how do we handle inventory? When am I recording cost of goods? It goes to Amazon. When do I show it as an expense on my cost of goods? All kinds of those types of questions that we see, and all kinds of different processes and methodologies that are deployed. And most common what we see there's not a commonly agreed to process of how that's happened. It's a little bit here and a little bit there, and then their accountant gave them some feedback because they have to reconcile at the end of the year for tax purposes, and then they go back to their other system that was kind of happenstance, if you will. So it's not a clear, concise system on the cost of goods inventory side.
Yeah. As I've spoken with many entrepreneurs that have exited their businesses, or even aggregators that are looking at acquiring other Amazon brands specifically, one of the biggest issues is that cost of goods, right? And not tracking things properly, not adding in, kind of the freight and your actual landed cost. And one time I need to purchase 10,000 units, but next time I only need to order 2,000 units. Well, there's going to be a price difference in what you're paying per unit at each of those different levels. So I'm curious, Jason, from your perspective, could you walk us through, in your vision, the correct way to kind of reconcile cost of goods sold on a monthly basis? How should people be tracking it, number one, and how should they be reconciling it at the end of each month?
Right. So there's a few methodologies that are out there, and largely will depend on your revenue and a few other things that are going to guide what systems, and also operationally. What's the volume of business? Where's the physical location of the inventory? A few other things. But generally, there will be two different systems. One is where we're going to apply all the purchases to an inventory account. And then we're going to look at what was the gross sales for that month. And then the other direct costs if we're going to incorporate that as well. And then do an inventory count or have an inventory account, and then we extract out the value from that inventory account and move it to cost of goods on a monthly basis. That's a simple version, and that's for businesses that have either a lower volume or don't have a bigger staff, or they've got other challenges on the operational side, or they don't need that level of visibility. They've got a separate system that's tracking their inventory and things. So that's the first methodology, and the second one is using a software where it's tracking all that down to the SKU level of where is, especially if they got multi-location and things. And so the softwares can handle big chunks of that. What we do is we integrate the other costs that are not incorporated into those softwares that's managing on that cost of goods. Like, okay, we sold through 2,000 units. It was $5 an item. That gets posted to the general ledger. But then there's other costs, like you mentioned, like if you have a 3PL, if you have storage, if you have freight or import duties, these other things that we would argue are direct costs, part of the cost of goods calculation. Those things need to be added to that on a monthly basis as well. Because again, we talked about earlier, consistency of the data. You need to be doing that. Our recommendation at minimum is doing it monthly, is closing that out on a monthly basis.
Yeah, makes a lot of sense. Is there any software that you would recommend for Amazon sellers to better track their inventory to help facilitate that?
Yeah, it's really tough to give a specific one because the landscape changes so quickly. It's such a real challenge for us to be able to say, yes, that's a really good one for Amazon sellers. So there's a couple factors of how we would recommend to clients to evaluate those things. One, talk with your accountant, whoever you're working with, bookkeeper, get their feedback, because it may make sense for you operationally to have something, especially if it integrates with a shipping system or some other system that helps support your operations of your business. But include your accountant or bookkeeper in not so much where they're driving that decision, but they're aware of it and can give you feedback on, hey, this might actually complicate things for us, and your data is going to be different on the reporting angle. And hopefully you've got a good enough relationship with them that you're going to trust their advice on that angle. So that would be the first thing. At least give them, hey, we're thinking of going this direction. Do you have any feedback? Ask that question. Two, like we talked about earlier, operationally, it's very important. We're not going to come in and say, you should do it this way because it's better for us and it calculates the cost of goods correctly. We can handle it. And then it doesn't sync up with an ordering or your 3PL or these different things that you have to do operationally. It needs to be part of the whole picture, not just from us as accountants. Yeah, it works great for us, but you're off on your own trying to figure out the rest of it and manage your operation sides of your business and things. And then the third, and I think the most important, do you have a good relationship with that vendor, software vendor? And for me, it's all around service. For my experience, the software vendors that have reachable customer service that respond within a reasonable amount of time, and when I say reasonable, it means it has to be effective for you. Like if you got a $5 million a month operation, you need a higher level of service because one day that goes sideways can cause a big problem for you. But for the business that has a $500,000 a month, they're probably it's not going to be as big a priority. So a reasonable amount of service. My experience has been when I see software vendors that are responsive and engaged with their clients, they're usually a better product and experience and overall deliverable to the user. So no specific recommendation, but that's how we walk through with our clients to evaluate decisions.
Makes a lot of sense. And I think you gave some good guidelines and guideposts for people to follow as they consider those options. So I'm interested in kind of pointing our conversation more to, the unique way that you kind of restructure people's P&Ls and the different ways that you bucket the different items on a P&L so that a business owner can actually make business decisions based on the financials. And so, Jason, would you mind kind of diving into some of those buckets in the unique way that you guys view the P&L statement catered towards a business owner?
Sure. It'll step up a little bit just of the philosophy of what we're approaching this. We know, at least from my perspective as an entrepreneur, I'm looking at my P&L pretty consistently. But the other reports, like let's say forecasting and some other things that are a little more into the details, I don't look at as much. almost all of us are familiar. Hopefully, we're all familiar with our P&L statement. So it's something we're looking at quite often. And we look at our job as let's leverage the behaviors that we're already doing as business owners. And so we want to, okay, let's reformat this so that when you're running your 12-month comparison reports, you can see different trends. And if we're putting those side by side in those buckets, as we're going to talk about, it makes it easier to see, hey, where's my spend going for these different areas, activities in my business? And so we'll start with the advertising, promotion, sales, marketing, depending on how you want to categorize it. In our view, we want to order or put in place by the intent of the expense. And what I mean by that is you have an agency that's managing your ad spend. That would be part of your advertising promotion. If you have a VA or an employee who's purely dedicated or half their time is dedicated to that, we want to include that in that bucket. So we're not going to lump together all of the agency spend into a bucket. It's going to be spread around these different areas if you've got multiple agencies. So I know most of our listeners are going to be in an agency where they're managing the ad spend or developing email strategies or other things like that. But you may have a VA that's helping you on the operation side. We want to keep that separate from when we say gross payroll or gross, contractors. We want to separate that out into those different areas of use. So if we had an operations assistant, he or she would be under the overhead costs unless there was a customer service group as well. So that's kind of an example how it works. And anything else that we can't categorize, we put into the overhead, those grouping of expenses.
Interesting. Very good. So you have overhead, any other buckets that you create?
So advertising, promotion, overhead, or general administrative might be another term that we would use. Website technology is another one, because some of our bigger operators will have maybe a couple different stores that they're managing, and they have either a full or part-time technical person on staff and things. And so those are the most common ones. The other one we might have is if there's our bigger stores that have multiple payroll people, we probably have like an administrative side as well, just to break that apart from. And then the final one that we'll do is we call owner's compensation. And that bucket is there for two reasons. One, it gives you better clarity as a business owner how much you're compensating yourself. But it also includes things that are not necessary for the operations of the business, but are likely advised by your tax advisor to make that spend. And an example would be a home office. Is that absolutely necessary to run and operate the business? Most cases not, but we want to recognize that and include that in the net income numbers for the tax advisor. But we want to give our clients the visibility of pre-owner compensation, what's the revenue, the net revenue. And a common metric for lower end on the revenue side, businesses that are going to market is seller's discretionary earnings. And right. So we basically put that number above that owner's compensation group of expenses, and then we have the net income number underneath that. So it gives, again, a quick glance, because we were getting lots of questions from our clients like, hey, what's my valuation? What will my business be worth? So rather than field all those questions, we just started putting it into their P&L so they can make their own calculations.
I like that. So almost having that owner's compensation almost be kind of like, here's all of my ad backs in a way, right?
Correct. Yeah. And we line item about, especially if there's tax considerations, again, it gives better visibility for the tax advisor to put it in the right line item. And that also lessens the questions we get at the end of the year, tax season wise, from our clients and their tax advisors.
Yeah, makes sense. What about continuing education, right? Many people purchase masterminds or they purchase, courses to learn about, advertising or whatever it is. Where would you kind of bucket those items?
If it's specific to a team member, that's like, let's say on the advertising side, we would include that on the advertising promotion area.
Okay.
If it's not specific or it's going to be general use, we'd put it under overhead. And if it's owner specific, we would put it down in owner's compensation.
Okay. That makes sense. What about kind of just your general e-commerce tools, like kind of like your tech stack, right? So for an Amazon seller, it might be your subscription to Helium 10 or to Jungle Scout or to many of those type of softwares that we use. Is there a general rule of thumb that you follow there?
Again, we separate it out based on use. So if there's not a clear use in a particular bucket, then we'll put it under overhead. But if it's, most of the software subscription we see are in two areas. One is supporting the website in general, the stability of the operations of it. So we'll put that in the website technology bucket, and then the marketing related ones we'll put up above in the advertising promotion.
Awesome.
And the other good thing about that is we're all familiar with ROAS, and that's a common knowledge metric or KPI within the e-commerce community. Again, we kind of wanted to reimagine that of ad spend. I know is a huge part of how we manage and operate our business finances. But we also want to include those other areas that are supportive of that. I think it's important to have visibility on ad spend, usually the biggest dollar amount, but there's also agencies involved and other things, and acquiring a customer takes multiple touch points. And so we want to include those other areas. That's why we like to group those together in that single area, so you can see what's my total spend to acquire a customer or keep a customer.
Yeah, makes a lot of sense, because if you have an advertising specific software, whether there's many of them out there, right? Whether it's PackView or many of the others, what you could do is you add that expense to your overall marketing promotions bucket, sounds like, which I think is very valuable. So correct me if I'm wrong, but basically there's only 4 buckets that you create for your expenses. You have your advertising and promotion, you have your overhead or kind of general expenses, then you have your website technology, and then owner's compensation. Are there any other buckets that we're not talking about?
Those are the 4 we deploy in pretty much every one of our customers that starts out with us. The rest of them are generally going to be direct costs, and that might be a good segue into our approach to direct costs, which is anything that's elastic with the increase of sales that's directly attributable to the value of the product being sold. And for us, that includes the shipping to arrive to your warehouse, import duties, logistics, anything it takes to get the product to the customer. So if you're managing the shipping, everything that goes into that direct cost, that's our view. And the reason that's important is we need to understand what those elastic costs are going to be for when we're doing cash forecasting and things, because if we don't have visibility historically, we're going to miss the mark on, especially if there's a big spike in sales or some other thing where you weren't expecting it and you need to quickly adjust your orders or your supply. If you don't have visibility, you're going to shortchange yourself in the long term. And this is where we see a lot of times where most of our work with clients ends up being in the gross margin area, really getting clear on what those direct costs. It's not the cost of good itself, it's all of the other inputs expense-wise that deliver that product to the customer needs to be included in direct costs so that you're accurately forecasting your cash needs for inventory and coverage purposes.
Interesting. So are you breaking them into individual line items then, rather than creating a larger bucket that's just shipping, right? Are you breaking those up, or explain a little bit more in terms of like how you set that up for a business owner to, at a quick glance, look at the information and interpret what's going on?
Yeah. So most of our, like on the profit first side, when we're going into a new a business that hasn't engaged with us before, 80-90% of our clients there have gross margin issues. Whenever I hear, hey, I'm trying to tighten the belt on my operating expenses, invariably it's almost 100% they have gross margin issues. And what I mean by that is they're not incorporating those other things that we were just talking about before in their cost of goods, and therefore their pricing is failing them. And yes, there's market forces that are at play in pricing our products, but if you don't have visibility and clarity of what your costs or your inputs are to deliver that product or service, in our case products, to the customer, then you're going to shortchange yourself, and you're thinking it's on the OpEx side when it's almost always on the gross margin side. And so we get very granular. Usually we start with the top 10 SKUs dollar-wise, and then we work our way down from there. And we don't try to do it all at once. We're just looking for the biggest dollar movers in the beginning, and then trying to come down as however granular that the client wants to get on each SKU. Get clear on all those inputs for each of those major SKU items or individual items, depending on the number of SKUs that a store has. And get clear on that so that you understand what your pricing things are, because it's super important to know what you're going to need cash-wise to deliver that product. You can get that into the warehouse, but if you're not going to have enough cash to have your overhead, to run your ads, to support your team, warehouse and logistics, you're going to be scrambling. And we see that in so common where store owners get caught with trying to liquidate a bunch of inventory at fire sale prices because they caught short on cash. And usually it's because they weren't clear on all the inputs it takes to deliver the product and therefore the direct costs.
Makes a lot of sense. Jason, let's kind of dive even deeper into like, what are these direct costs that you're speaking of? Because I agree. I think this is something that's overlooked so much. So let's get into the weeds here. Let's lay out like each of the line items that incorporate into that roll up into a direct cost for just selling a widget.
Yep. So first one would be packaging. Outside of the item itself, I know many clients have where the product is delivered with the packaging. Sometimes it's added on site. There's different scenarios, but packaging is the first one. Warehouse costs and how to amortize that to an individual item. We don't get to that level. We usually group it in its own account and label it 3PL or warehouse or logistics on the direct cost. But we don't try to amortize it down to the individual items sold.
Okay.
Ourselves. And so those are the kind of two of the major ones. Then if you have a warehouse team members or other people that are dedicated specifically to delivering or preparing the product for sale, that payroll item needs to be included, that labor item needs to be included. Some other ones that may not be as visible is for those who have evolving SKUs where it's seasonal or you're updating it on a semi-annual or timely basis, your creative costs, that needs to be part of that as well. So if you're engaging with a internally or externally creative to update the packaging on a seasonal basis, whether it's yearly or semi-annually, that needs to be included as well. And there's some debate of where do you insert advertising? Is that part of the direct cost? In our view, it's not. And the reason why we drive that, and this is not directly for Amazon sellers, but in a broader e-commerce sense, and we want clients to be thinking about alternative traffic sources. So we want people to think, business owners to think about, yeah, there is other ways that we can engage traffic. It's not all paid ads strategies and things. Yeah, that's a huge driver for all of us. But let's be thinking about other things that if we can keep our ad spend the same and we can get more sales, that's a good strategy in my view. And so we want to, that's why we don't include it in the direct cost or the, up above the gross margin area ourselves, is because we want clients to be thinking about, there's other strategies that we can deploy to get more customers, whether it's email and things like that. Again, not directly applicable to a lot of Amazon sellers, but I think it's useful to be thinking in that regards as well.
Yeah, I like that approach too in terms of the advertising, because there is a debate. Do you roll up advertising? Amazon's becoming much more of a pay-to-play type of platform. So do you roll it up above gross margin or gross profit, or do you leave it below? I like the idea of if it sits below your gross profit margin, does lead to, hey, if we want to reduce this but still grow sales, what are other ways to market our products outside of just our Amazon sponsored ad costs? And might be an influencer strategy. It might be Pinterest ads, or might be some other type of ad strategies just to start allowing business owners to get a little more creative.
Correct. Yeah, we want to provide clarity, knowledge, and also we know technology changes a lot. That's like you just mentioned about Amazon and lots of the other platforms are the pay to play. But as we've seen with AI and other things, the technology landscape changes rapidly, and having one mindset to approach business development or sales development, I think, is a disservice. We're entrepreneurs, and we're there to service a need, and that technology and the other methods may change as long as we're delivering value to our clients. That's what we want to be focused on, and so that's why I'd like to separate it out. Again, it's more philosophical approach, but I think there's value there to having it separated. But that's why we put it at the top of that P&L, the advertising promotions, the next line and below gross margin. So you can see it's right there. Visible.
I like that. I like that you also mentioned earlier in our conversation that the reason why you break things down into these bigger buckets is for a better year over year or month over month comparison. Can you explain why that would be important to have them in their buckets as you compare? Is it best to compare year over year or month over month? What's your kind of feedback and direction to clients there?
We like doing monthly comparisons. So as many of us who are familiar with either buying or selling e-commerce businesses, that people like to look at those numbers on a monthly basis, and we see the same thing. And it helps us see trends. We're looking at what's the trends, what's going on, and trying to tie it back to decisions or things that have happened in the past. Like, oh yeah, we launched this new product, or we have a different agency now, or we switched to a different platform for our paid traffic strategy. All these different things that we're making decisions about, we often don't look back and say, okay, how did that decision go? Why did I make it back then? And here's the results. Many times I made a decision and then I think it worked, but I never really am clear about it. There's varying degrees of ambiguity, if you will, around that, but in general, there's not a systematized approach to that. And so if we bring it visible in a monthly way for our clients on the P&L, again, leveraging their same habits that they're already doing, it becomes easier for them to see those things without us having to point it out to them or them to drive questions, which is very rare, unfortunately. Most of our clients or many clients don't engage with us and ask those questions. And having that visible to them puts it in front of them to make them think about it and things. And so too much data, too little data, I think that's a good blend between the two, in my view.
Yeah. Do you have any examples of, things that can grow or evolve month over month that seeing them in the different buckets and comparing them, can show like warning signs or, hey, yeah, we're crushing it?
For us, it was about 2 years ago. We noticed within June, July, about 2021 it was, that we started seeing for several of our clients, Google Ads effectiveness drop precipitously for several of our clients. And we were able to see that within like a month of looking back and it's like, oh, the ad spend is still in, but the sales have dropped. And so we were able to confirm that with several clients. It didn't hit everybody the same, but we saw the trend. And so in talking with some of our clients, we'd have monthly calls with some of them. One client mentioned that I wish you would have told me that like 2 or 3 months ago, because I was beating myself up that I was screwing something up somewhere, and it helped to validate like, hey, I don't need to change a lot of things because it's not me, it's a broader impact. Now, at least he had awareness of that, whether that was the right decision or not. That's for him to decide later on down the road, but at least we were able to bring that visibility of seeing the broader trend, comparing it to all of our other clients and seeing that happen. And so having those numbers on a regular basis, again, e-commerce monthly is important because things move so fast in our view.
Yeah, totally agree. And I think one other important aspect that I would point out is that if you're comparing your Amazon fees, right, your FBA fees month over month, you'll be able to identify when Amazon increases their fees and the impact it is having on your gross profit margin, right? Because I think too many times people they let this, fee increase go by and they're like, oh, well, I haven't really seen a direct impact. Whereas if they actually started comparing, they would see like, oh, wow, I went from a 20% FBA fee to now I'm at 22%. Like I just lost 2 percentage points in net profit margin at the end of the day because I haven't adjusted my prices or anything like that. And so again, it provides the business owner with at least the insight of like, hey, things are creeping up here. You may want to consider adjusting your prices to maybe combat this and bring it back down.
Right. And that's something that we see. It's, again, dollar volume wise, it's not huge unless it's a high volume, high sales store. But that's an example of Amazon's constantly changing the fees and where they're posting it, and we catch it because we use software to match with QuickBooks or Xero each fee. So whenever there's a new fee that's not in our ecosystem, we're going to know about it right away because it'll post it to like another expense. So if it doesn't already map, it's just going to try to create a new account. And so our team will see it and will be aware of it. And so we generally put those into a bucket. But like you said, having that visibility and knowing about those things, especially if it's related to a consistent sale or it's going to be ongoing, something like that. The Amazon notorious for adding things and not telling or making people aware of that.
Yes, indeed. Are you using A2X? Is that your connection?
Yes. Yeah, that was our and we require that for all of our clients that we work with. It saves anywhere from 30 to 50% on a client's monthly billings by implementing that. It gives us a lot of visibility, for, like you said, on the fees things. That way we don't have to manually check those. We see it right away because they're a service. And then also for us, if there ever is an issue, A2X is usually able to handle on the technology side. There are other ways to manage that, usually through a macro in Excel or something, but then we prefer to focus on the finance side and not on the technology side. So we use A2X as our service provider there.
Makes sense. I want to, before we dive into the profit first strategy that you guys implement with your clients, that's, I think, the crux of this conversation. But before we get there, I'm wondering, do you have maybe some guideposts that you could provide to us, maybe specific to Amazon sellers that are, hey, here's on average what your average cost of goods sold as a percentage of revenue should be. And here's on average what your, FBA fees should be. And then even your advertising, right? Like what percentage of your total revenue should your total ad cost be? Do you have any kind of mile markers for us to use as a rule of thumb to say, hey, it sounds like I'm ahead of this or I'm behind, like maybe I need to do better?
Yeah, we focus on the gross margin aspect of it. So those are all very useful metrics that feed into that number. What we found is having gross margin as the focal KPI or measurement thing. We use that for clients that are, hey, should I get into this product line or should I be adding this SKU? Definitely we would like those questions. It's not as often as we'd like to get those questions, but so we're generally teaching our clients, let's target 30% gross margin. And that's where that exercise that I mentioned to you before of the direct costs and things, like including your creative, packaging, all these other inputs into creating the product and delivering it to the customer needs to be incorporated into that. That's where we reach that 30% gross margin. And so it's been tough for us. We've tried to get a little more granular on that, and we've had to kind of come back to the gross margin thing just because there's the fee landscape changes a lot, the advertising ROAS market landscape changes a lot, and then the products, like, for example, the supply chain challenges we all experienced in the last year, 2 years, how that shifted a lot of things. And so we've kind of always circled back to the gross margin unless there's a specific instance that a client has a lot more data for us to utilize. So I would say to anybody, target 30% gross margin. You're generally going to have, I'll say it, somewhere close to self-liquidating growth, as we call it.
Perfect. That makes a lot of sense. Are there any other big KPIs that you would have people track other than gross margin?
The other one would be your net margin. What are you in business for? We'll get into the profit first, it sounds like, in a little bit. But I've had successful entrepreneurs, they're looking at that net margin number quite consistently. And they've been successful in other places outside of the e-commerce industry as well. We entrepreneurs have multiple opportunities, lots of opportunities. In fact, far too many of them, I'd say, that sometimes we get distracted. So, what are we in business for? And we want to make some money. We got to, for our labors, our work, our risk, that we need to have some net margin. And so I always see the successful entrepreneurs are targeting they have some number in mind of, why am I even in this business? If I'm not able to reach that 10, 15, 20% net margin, well, why am I here? They ask that question. And so that would be one I think that's missed, especially in the previous few years, where their valuation metrics were getting maybe a little bit out of hand, or depending on your opinion of it, it's definitely different than it was in the prior years. Yeah. And I think the easier money that was available for those is probably going to be less available. And so we're going to have to get back to the basics of, is the store profitable? Is the business profitable? And so for me, it would be the net margin, a consistent applier to that. For entrepreneurs, those have been the successful ones that I've seen.
Makes sense. With the net margin, I'm curious, when you calculate your net margin at the end, are you adding back any of your owner's compensation expenses to that? Or do you almost kind of have two net profit, metrics at the end of each month? It's like, here's what it is, including your owner's compensation stuff. Here's what it is if you're not including.
what we would use is if the owner's active in the business, we would incorporate their salary as part of the business expenses and include that cost in the net margin. If they're not actively involved in the business or very little, like the situation you mentioned earlier, we would add that back to come up with.
Yeah, makes a lot of sense. Awesome. Well, Jason, let's pivot now and start focusing on this profit first mentality, because I think this is one of the most important things that you do and you help your clients with. So why don't you give us a breakdown and ideally how an entrepreneur in e-commerce could execute this strategy themselves?
Yeah, the profit first is the number one system I see that makes a difference in businesses, not just e-commerce, but I know we're going to be talking primarily about the e-commerce angle of it. The confidence after implementing a system in any business owner with profit first goes sky high. And the way I like to frame it in this way of you're taking 80% of the finance worry and putting it into a system that you can implement anywhere from 1 to 2 hours a week, where you're going through your numbers, you're allocating your money between the accounts, paying your bills, looking at your numbers, and you've consolidated that worry, that concern into a trusted system that you can implement that doesn't require a lot of extra education and knowledge. And with the technology, especially the banks that have been popping up, fintech banks have been popping up in the last couple of years, there's no excuse for online or e-commerce entrepreneurs to implement a system like Profit.
Makes a lot of sense. Would you kind of break down the details of how you would execute that in e-commerce business then?
So to start with, we would do what we call a profit assessment. So we take the financial data, this is where we need good bookkeeping in place to do this, looking at the last 12 months of numbers, P&L, balance sheet, and then we recast it into a profit first format. And what I mean by that is we take those numbers and put it into, hey, this is what your OpEx is. This is what you're in, like we talked about buckets. It's kind of a similar process, but on the cash management side. And so we're seeing where's the money going to. We want to give visibility to the business owner. Where does your funds go to? You know, for every dollar of revenue, what's the percentages of where that dollar was divvied up among these areas? So we create, well, hey, this is, and we call it current allocation percentages or CAPs. So we get that picture, okay, this is where you're at, and then we have the targets of where we want to go. And Mike talks about in the book, Mike McCullough's the originator or author of the system Profit First. He has some metrics that he's built out based on his research across the board with businesses, which are pretty accurate. Anybody could use those, e-commerce store owners, anybody can use those to self-implement Profit First. Where our expertise comes into play is nuancing it to e-commerce store owners and the different things that are nuancing it, and like I talked about earlier, of looking at the broader picture of multiple clients and implementing it and what's their challenges, what happens when they run into these situations. Our expertise is those coming in and being able to provide advice. And so starting with the current allocation, building a roadmap for 6 months going forward of our target allocation, and then we're slowly implementing and trying to get to those metrics so that we retrieve that profitability and stability, financial stability of the business.
Yeah, makes a lot of sense. You mentioned that, you know, the challenge is somebody trying to adopt this into the e-commerce space. What challenges have you seen, you know, that you're able to help clients navigate through implementing this profit first strategy for e-commerce?
So the two biggest impacts we see for our e-commerce clients, one is, like we talked about earlier, the gross margin question is, like I mentioned, that's where we get that visibility on the gross margin of, are you even close to what you're trying to achieve gross margin wise? Is it even in the right buckets? And so as part of that process, we get really clear on the gross margin. We'll also do a quick win in the beginning of doing an operating expense review. In my experience, compared to brick and mortar businesses, e-com operators are generally more efficient on the operating expense side, but they're less efficient on the traffic spend side, where they make these larger assumptions about what's going to happen when they bring that traffic in. And generally, there's not a look back of, are those even successful? Or are they meeting the metrics in mind? So we get really visible OpEx review, gross margin review, and then we work with the business owner. Hey, what's your long-term goals? Is this something you're looking to exit from in a 3 to 5 year window? Is this a hold play? Are you an aggregator? What's your story? What are you looking to achieve in the long term? And then we use our expertise to give some advice on what that roadmap is to get to that 6 month of changing from your current to your target of where you want profitability wise for the business to get to.
Makes sense. So do you kind of almost calculate, if I want 10% net income, right? You start kind of setting up the systems then so that at the end of the year you would get to that point then? Is that a correct assumption?
Yeah, that's a basic nutshell of it. Yeah, it's getting those so you're really clear on like what do I need to achieve sales wise, and or these other inputs of making that number happen. Pricing my product, or maybe I need to drop some SKUs because they're eating cash, or that's cash sitting on the shelves that I could apply to this other SKU that we keep running short of, and that's actually driving profitability. And so sometimes it's a review of the SKUs. Again, we start with the top 10, and then we work our way through there as the client thinks that they need to get that level. And the other one you asked about impact, and I forgot to mention this, was the inventory side. So two of the most common things we work with that make the biggest impact is the gross margin question, and then having enough funds to buy or acquire more inventory on a timely basis. And one of the two accounts that we'll set up with all of our clients outside of the normal system that Mike talks about, one is an inventory account or a lead time account.
Okay.
And so having let's say the broad mix of your cost of goods is, let's say 50%, just for ease of argument's sake.
Yep.
And so 50 cents of every dollar of revenue is going to be allocated to that inventory account so that you're replenishing, able to make your orders on a timely basis and not have to, be scrambling at the last minute, getting your supply chain organized and being able to deliver on time and things. So allocating a percentage of your gross revenue to an inventory or replenishment account so that it takes away a huge chunk of your work. It's not going to be exact to the penny, but that's one of the goals, is to have a reserve or an inventory reserve. There's different names our clients have used for those accounts, but it's effectively an inventory account. Its specific purpose is to have enough funds to acquire inventory, a big chunk of it.
I love that. That's a great little gold nugget there that you dropped with us all. So I love that. Well, Jason, this has been such a fun conversation, and I know I've certainly learned a lot. I love to leave the guest with 3 actionable takeaways from each episode. Here are the 3 actionable takeaways that I noted, but Jason, let me know if you think I'm missing something. So first and foremost, you've got to, if you're not paying attention to your books right now, you should be looking at your books. And I would recommend you need to do this at least on a monthly basis. If you are not looking at, hey, what happened last month, and then reevaluating and comparing, how does this compare to what happened the previous month, and being able to see those shifts and changes, whether your advertising is becoming less efficient, or your Amazon fees, or just general processing fees, wherever you're selling, are creeping up. If you're not aware of those things, you're going to look back at the end of the year and say, what the heck happened? And so as a business owner, first and foremost, make sure you've implemented a monthly financial review to review these metrics. Then secondly, my next action item is that you need to make sure that what you are putting into this accounting system is actually accurate. Because if it's crap in, then it's crap out, right? And so it's important to make sure that the data you are feeding it is correct data, right? So again, evaluating the right software partners is important. And we talked about a couple of them, A2X, if you're an Amazon seller, and how that can integrate and help break things down for you and make sure that it goes into the right buckets. But make sure that you're tracking, and probably the biggest portion here of accurate financials is going to be your cost of goods sold, right? So making sure you have a really good way of tracking those cost of goods sold and a software that might help you facilitate that. My third and final action item is to implement a profit first system in your business. And I love the idea that Jason had of creating an extra bucket instead of the standard, hey, here's my profit and here's my tax accounts. But creating this inventory account is very, very important so that when it comes time to make those purchases, you actually have money set aside to do that. Extremely valuable. So, and I think Jason has even more wisdom he could share, and I would encourage you to reach out to him if you have questions about setting this up in your own business. Jason, are there any other actionable takeaways that you think I missed here?
I think you captured it very well there. Each of those ones, consistently looking at your finances, understanding your direct costs, and profit first definitely will make a big difference for each of your listeners.
Awesome. Well, Jason, this has been super valuable. I like to ask each guest 3 questions. So we're going to start at the top here, Jason. What has been the most influential book that you've read and why?
Profit First, Mike Michalowicz. I wish I would have had that system 10, 15 years ago when I was doing bookkeeping and consulting, my previous business. This is my 3rd bookkeeping accounting business. And if I would have had that, I would still have been doing it. It would have been like my 2nd decade. So it's the impact it's had with our clients is just almost astounding. So that would be the most influential book. Yeah.
I'm curious, without the profit first methodologies and strategies, what ends up happening with the money? Do business owners just tend to just kind of spend it on frivolous things, or why does it just disappear without profit first implement?
I think it's like Mike talks about, it's the small plates theory, if you will, breaking things into and being intentional. I look at it, if it's at the philosophical level, it'd be being intentional with your cash and where it's going. And so that system, breaking it into smaller groups, allows you to have that visibility to stay consistent with being intentional.
Makes a lot of sense. All right, here's my next question here for you. What is a new productivity or software tool that you've recently discovered that you think is going to be a game changer?
Well, for me, it's one of 2 things. One is called Rescue Time. I've been using it for a few years. I don't know how new it's been, but there's different things where it's tracking my different uses and time, different things that I'm a part of. And it's allowed me to get, spend a little bit too much time going through YouTube for training videos, searching for things that, I should probably delegate that to my assistant and things. And so it's not where beating myself up about it, but it's using something where I get a little bit of visibility of, I need to step back and delegate this, or something to like measuring my behaviors, whatever. Because most of all my work, and most of our listeners, I assume, would be similar, where they're on their laptop or their desktop a lot of the time during the day. So for me, it's one of some type of a tracking. And the other one is Pomodoro, using one of the different Pomodoro apps of putting things into buckets of time-wise. Like 20 minutes, I'm going to focus on this, and then it's lunchtime or break time or meditation time.
Yeah, I love that. Those are some great recommendations. And Rescue Time, again, that is so important. Doing time studies is something every entrepreneur should be doing at least quarterly. So that is great. All right, my final question is, who is somebody that you admire or respect the most in the e-commerce space, and why?
In e-commerce, I would say another of our Profit First community is actually Cindy Thomason. So when I joined, she works with a lot of Amazon sellers in her business, very similar services, but I learned a lot from her when I joined Profit First, of seeing how she was engaging with clients and the impact, again, that she was having with her Amazon clients and things. And so for myself, maybe a little self-centric, or I guess you'd say, but it's been very helpful for me, and then also helping our clients that are in e-commerce as well.
Awesome. Well, that's a great name to point people towards. Well, Jason, if people want to learn more about the services that you offer, the bookkeeping, the strategies, and how to implement this all in their own business, where could people reach out to you?
Yeah, so you can find us. Our web presence is summitecommerce.co. That's our website there. You can also email me, jason@summitecommerce.co. And then I'm also on LinkedIn as well, Jason Snider. And my title there is Profit First Zealot.
I love it. Well, Jason, you have shared a lot of wisdom with us all. I definitely encourage our listeners to reach out to you and to learn more there. But I appreciate your time, Jason. Thanks again for joining the show.
Yeah, thanks again for having me, Josh.
Thank you for listening. Visit ecombreakthrough.com for more information. If you've enjoyed today's episode, the best way you can show your appreciation is by clicking the subscribe button and quickly leaving a review. See you again next time.